Hello and welcome to Morning Trade with Money Control. I'm Nandita Khemka and I'm here to help you get some trading strategies to navigate the trading day, as well as to watch out for the sectoral trends that may play out in trade today, as well as take your queries live with our guest on the show. And so if you have any queries, do send them in to us with the hashtag AskMC and we will have them addressed on the show. But before we get our guest on the board, let's take a look at what the global handover is looking like this morning. Asian markets kick off the week on a mixed note. Nikkei slips amid a steep sell-off in shares of SoftBank, but Hang Seng jumps over 3% in early trade. SGX Nifty is hinting at a flat but negative start. European markets ended mixed on Friday as the buoyancy triggered by the softer-than-expected US CPI reading fizzled out. Meanwhile, S&P 500 closed out its best week since June, while Nasdaq added about 1.9% as investors snapped up tech shares on hopes that interest rates would ease. Aurobindo Pharma may come under pressure after Q2 profits drop over 40%. Remember, the shares had seen a massive sell-off last week on concerns over corporate governance. Also in focus will be LIC, Glenmark Pharma, as well as Zee Entertainment. Well, let's focus in on the pharma pack then. We're now joined in by Anubhav Sahu of Money Control Pro to discuss the outlook on the pharma shares after the second quarter earnings. Good morning, Anubhav. Good to have you on the show. Most of the pharma companies have reported their second quarter earnings. What is the one key thing that stood out for you in the quarter gone by for these pharma companies?
Thanks, Nandita. Thanks for having me in the show. I think most of the Q2 results are out and largely been good for the pharma sector. Particularly those which are exposed to US generics, they have done well, and this has been on the back of quite good launches, due to which they have been able to offset pricing erosion. And some of the companies which had a participation in the launch of generic version of Revlimid, they did quite well, like Cipla, Zydus Lifesciences, and Dr. Reddy's. Then there are companies like Sun Pharma, which did quite well on its specialty. It continues to do well there. It also did well on its domestic formulation business. Other than this formulation segments, the segments which stood out in healthcare is CDMO and hospitals. Hospital did quite well in terms of improvement in patient volumes, better case mix, demand for elective surgeries and all. That helped across the sector, and the CDMO opportunities have been quite steadier. And if you go by the results of, say, for example, Syngene and Laurus Lab, they have quite well. Davis Lab, of course, was impacted, but it was because of weaning of COVID-related opportunities.
Right, Anubhav, Aurobindo Pharma has reported a 40% decline in its profit. In fact, there were some corporate governance issues that have come to the fore last week as well, and after that, the stock saw a fair bit of drubbing. What is the outlook on the company going forward, given the fact that these issues have come to the fore and profits have also disappointed?
Yeah, so true. As far as Aurobindo Pharma is concerned, unlike its peers which are exposed to US pharma, Aurobindo hadn't had a good traction. There was an below expectation performance as well as top line, both on top line as well as on margins are concerned. They have a good exposure to US pharma, wherein there's a sequential drop in revenue on dollar terms. So we think that it is largely due to absence of any big launch, as well as they continue to be impacted by structural pricing erosion. As far as our views on stock is concerned, yes, Nandita, hello.
Go on, Anubhav. Sorry.
Yeah, so on Aurobindo Pharma, as far as stock is concerned, we continue to remain on the cautious side, though there is a valuation comfort. But we have been cautious mainly on the execution front as far as the regulatory issues are concerned. And of course, the corporate governance issues doesn't help. Of course, the company has given some clarification. They say that the alleged corporate governance issue has nothing to do with the official responsibility of the director, but of course it doesn't adds to it adds to the weak perception about the stock and the business.
Right, Anubhav, among the large cap pharma stocks, Sun and Dr. Reddy's reported fairly healthy numbers for the quarter gone by. Would you say that pricing power is coming back to some of these pharma giants in the US?
Right. So, yeah, of course. And as I said, they have a few good launches like generic version of Revlimid and few others, particularly like specialty drugs, market share gains for Sun Pharma and all. As far as this a few of the new launches are concerned, I think one should be very cautious about extrapolating the gains which has happened this quarter. Because some of this business opportunities would be more yearly in nature, not quarterly, and particularly in some of the new launches, probably the size of gain probably will wean off as the competition catches up. So it would be a wrong inference if you understand this way that the pricing power is coming back. As far as the US business is concerned, in fact, US business continue as a sector continues to be a place where one would be seeing a structural pricing erosion right in the range from mid single digit to high single digit. Where the pricing power of pricing is actually continues to do well is the domestic market, domestic formulation market, wherein the companies which have an exposure there are getting both from volume front and pricing front.
Right, Anubhav, some pharma companies are grappling with US FDA woes. Sun Pharma, Lupin, Glenmark, some of them have got warning letters from the US FDA. Do you think this regulatory overhang to continue for some time going forward?
Yeah, I think it would be a mixed bag. I mean, some of these, post onset of pandemic, all these regulatory inspections were on hold. And so it was a double-edged thing for the companies. Because a number of these facilities were waiting for inspection to be done, and if they get clearance, they would be able to launch some of the new approved drugs. So they were waiting from that point of view, but it's also a key risk to watch, because if regulatory clearance is not through or it is negative, then it leads to a delay in some of the launches. So, for example, Halol facility continues to, there's a lot of uncertainty on the clearance of Halol facility for Sun Pharma. Same goes for supplies for Goa facility is concerned. But there have been other facilities wherein the clearance have come, and so probably there would be few more. So it's a mixed bag for the pharma sector.
Right. Lastly, what are the stocks that are looking attractive post the second quarter earnings? Which are the stocks that you would say have a fair bit of upside potential going forward?
Right. So as far as pharma generics, as we have been talking about those, so let's start with that. So we have been, we do like the business of Cipla and Pharma, Dr. Reddy's, Zydus Life Science. And Cipla and Sun Pharma had done quite well as far as the US product pipeline is concerned. The domestic business is also doing well. However, we now think that some near-term positives are already priced in. And but we do like Dr. Reddy's and Zydus Life Science, wherein there's quite a valuation comfort, and they are also gaining as far as a share of domestic formulation business is concerned. They are also trying to gain a share on that. On the CDMO front, we do like the traction which Laurus Lab is showing on the CDMO front. Syngene is doing very well on that side, and they are also. Davis Lab hasn't done well, mainly, as I said, it's because of weaning of effect of COVID opportunities. But that said, we think that the near-term triggers are missing for Davis Lab, and probably we have to wait for some of the big launches or big opportunities in custom synthesis in fiscal year 24. On the hospital side, we do like KIMS, which is a regional play on institutional healthcare, and which has a credential of acquiring some of the tier 2 assets and ramping up, and that's something which we like. In diagnostic, again, we think that the sector is going through a very huge competitive dynamics, but still one can watch out for players like Vijay Diagnostic, wherein the company is reporting that the pricing is holding up, volumes are sequentially improving, and it's a good regional play with a good offering on both pathology and radiology.
These are the pharma stocks to watch out for going forward. Thanks a lot for joining in this morning, Anubhav, and sharing your thoughts with us. Well, with that, let's move on to our next guest. Joining us is Rajesh Palbia of Axis Securities. Well, good morning, Rajesh. Good to have you on the show. Well, markets have clocked in a fourth straight week of gains. In fact, Sensex is sitting at a one-year peak. SGX Nifty this morning not really giving out positive signals, but do you expect new highs to be clocked this week itself?
Morning, Nandita. Yeah, definitely. Looking at the setup and the data which we are seeing from the derivative perspective, also it clearly indicating that we are very much in position to clock a new high in a very short period of time. Bank Nifty is enjoying all-time high, and every day we are seeing that Bank Nifty is continuously making new high. So clearly there is an indication from the banking and financial that this rally is likely to continue further in the banking and financial space. But on the Nifty front, again, we have seen a lot of sectors which were underperforming are now contributing, and the support is coming from the sector like IT sector, from metal space. So these all sectors are also contributing to the Nifty move. So we are very confident that in the November itself, we are going to have a new all-time high. So our bias is on the buying side only. A buy on dip should be the strategy. Till Nifty is holding above 18,100, 18,150 level, one should be on the buying side of the market. And very soon, once we are able to trade above 18,350, 18,400, then possibly Nifty can head further higher towards 18,600, 18,700 in the short period of time.
Right, buy on dips should be the strategy going forward. Coming to specific stocks, then LIC reported a stellar set of numbers over the weekend. It's seen an 11-fold jump in profits. And in fact, even the net premium growth has been pretty healthy, somewhere near about 27% or thereabouts. Now, the stock has shaved off somewhere around 28% since it listed back in May. But given the fact that the earnings are so stellar, do you advise buying this counter now?
Yeah, definitely. So stock has not done well for investor as of now. Still, stock is in bearish trend looking at the short-term, medium-term perspective. But near-term, yes, since last couple of trading sessions, we are seeing some buying action has been seen in the stock at the lower level. Looking at very short period of time, we feel that now if stocks continues to hold above 600 level, then possibly some pullback action can be witnessed in the stock towards 660, which is the next major hurdle for the stock. So trend is still weak, but for a short-term trading perspective, one can buy with stop loss of 600. Upside target should be around 660, which is the major hurdle which we are seeing on the near-term perspective.
Well, you can buy the stock with a short-term perspective. That's the view from Rajesh. Moving on to Glenmark Pharma. Well, the counter has managed to defend that 400 rupee mark for the last couple of weeks, and numbers have beaten analyst estimates. Revenue has been up 7%. In fact, it has clocked good growth in its India business. Given the fact that it has managed to defend that 400 level, do you expect it to clock somewhere on 450 or 500 on the charts anytime soon?
So pharma stock has not done great till now, but looking at the setup for Glenmark also, we feel that stock was consolidating since last couple of weeks, and now the range breakout has been witnessed on the weekly as well as on the daily chart. Looking at the daily chart now, stock is trading near to its 200-day moving average, which considered to be a bullish sign for the stock. And now if stocks holds above 400, 405 level, then possibly another round of buying we can see in the stock towards 440, 450 zone. So those who are already holding or those who wants to buy at the current level also can keep the stop loss of 405 for upside target of 440, 440 and 450.
Right, the next stock on my list is Zee Entertainment. Another weak quarter, profit has slipped over 50%. Weak operating performance. Advertising revenues have also dipped. Now, the stock has lost somewhere around 18% on a YTD basis. Do you expect the weakness to continue on this stock given its weak performance?
So price action is suggesting that there is still more consolidation we can see in the stock. Since last 4 weeks, stock is moving in very narrow price range. Even on the daily chart also, stock is struggling to hold above 50-day moving average, which is almost near to the current market price. So if any breakouts comes in the stock above 275, then only we can see some short covering action or some fresh buying action for trading perspective also. So those who wants to buy, wait for 275 breakout. If that breakouts happens, then possibly stock can really higher towards 295 to even 300 zone also. On the downside, 255, 250 is the important support area. So since last 4-5 weeks, we are seeing that stock is getting support around 255 to 250 zone and showing some pullback action. But still, breakout is not visible on the chart. So we are waiting for breakout about 275 to buy the stock.
Wait for a breakout above 275 to buy the stock. That's the call from Rajesh. Let's now shift focus to our viewer queries. We've been getting quite a few of them this morning. So starting with a query on Marico. Vignesh Salyan has written in and he wants your view on the stock. And we've seen that the stock has been in a steady downtrend over the last week or even a month. What would you advise him to do, Rajesh?
Yeah, in the last week itself, we have seen breakdown on the weekly chart. Almost a 10-week consolidation breakdown has been there in the Marico stock. Looking at the setup, if stocks continues to trade below 510 level, then possibly furthermore pressure we can see in the near term as well as in the short term also. In this corrective action, now stock is broken all its important moving average support area of 50-day, 100-day as well as 200-day moving average, which is also a bearish sign for the stock on the near term to short term perspective. So we are seeing furthermore pressure in the stock. It may go down further towards 470, 465, which is the next major support area on the stock on the downside. So till stock is trading below 510, our view is bearish on the stock.
Well, the view is bearish on this stock. Moving on to the next query, and this one is coming in from Zujan, and he has a query on Coal India. Now, the stock has given fairly good returns over the last 6 months. Do you expect, would you advise him to stay put in this counter?
So stock has done well in last couple of months also, and we feel that if you're sitting on profit, take some profit at the current level also, because stock is witnessing some selling pressure at the higher level. Since last 3-4 trading session, we are seeing that some supply pressure is there at higher level. So until stock not manages to cross about 260, it will not resume its trend again. So we advise to book some partial profit at the current level. Or trail your stop loss at 246. If it's break below 246, then our call would be to exit from the stock or to book profit if you are holding your position from the lower level.
We'll book partial profits on Coal India. That's the view from Rajesh. Moving on to the next one, it's on IHCL. Suraj Mandal has written in and he wants your view on this stock. Now, in Friday's session, it lost somewhere around 6% or so. Do you expect this to continue this week as well?
India, can you come again for the stock name?
Indian Hotels.
Okay. Yeah. So Indian Hotel overall trend is positive, but yes, we have witnessed some selling pressure in the previous trading session. Now stock is trading below its 50-day moving average. But looking at the overall setup, yes, if it stocks shows further more weakness in the today's session or in coming session towards 300 level or 295 level, it's a buying opportunity again, because overall trend is positive. So buy on dips is our strategy. At the current juncture, wait for some more corrective action. Wait for another 3-4% correction, then one can buy the stock.
Right. Moving on to the next counter. This is on Patanjali Foods. Sasidhar has written in and he wants your view on this counter. Over the last week or so, this counter has been under pressure. So what should he be doing with this one?
Yeah, on the near term, yes, stock is showing weakness. Stock has given a breakdown of its last 7-8 week range on the downside. So looking at the setup, stock is now trading below its 50-day moving average, which is also a sign of bearishness on the near term basis. Looking at the chart pattern on the weekly as well as on the daily chart, we feel stock can move further lower towards 1220, 1200 zone, which is the next major important support area for the stock. Though overall long-term setup for Patanjali is bullish, but on the near-term setup, we feel that some more pressure we can see. So wait for 1220, 1200 zone to buy the stock in the dips.
Right. Buying on dips is what Rajesh is recommending on this one. Moving on to the next one, it's coming in on Thyrocare. Ashokan P has sent in a query, and when we look at the stock, it has slumped somewhere around 40% on a YTD basis. Would you advise him to buy the stock on dips?
So yeah, so stock has delivered negative return year for this calendar year also, as well as even if you look at the longer term setup also, we have seen bearishness, series of lower top lower bottom formation is there on the daily chart, which is a sign of bearishness. But since last couple of weeks, after a big corrective action, stock is trying to create a base around 600 level. Multiple times, stock has witnessed some buying action around 600 zone. But still, till stock not crosses above 720, 740 zone on the higher side, it will remain under pressure. So our advice would be to avoid at the current juncture because still there is no clarity on the chart. If stock crosses above 740, then some strength we can see in the stock. But if it's break again below 600 level, then possibly stock can continue its down move and we can see further lower level also in the Thyrocare. So our advice would be to avoid the stock because still stock is in weak zone.
Well, no clear trends on this one, so Rajesh is recommending our viewers to avoid this stock at the current juncture. The next one is coming in from Prabhu, and he has a query on GNFC for the long term. In fact, in the last session, we saw the stock shaving off somewhere around 10% or so. What should he do?
Yeah, very sharp corrective action we have seen in the stock, and in this process, stock is now trading below 200-day moving average also. So some more pressure we can witness in the near term as well as for the short term also. But overall long-term setup for the stock is bullish. So if you want to buy the stock for long-term perspective, wait for some more corrective action towards 570, which is the next major support area. If its stocks comes around those levels, you can buy and accumulate the stock. And once stock again on the higher side crosses about 650, 660 zone, then it will resume its uptrend. So for long-term perspective, yes, buy around 570, 560 zone.
Well, the next one is coming in on the auto ancillary basket. Hari Krishnan has written in, and he has a query on Exide as well as Amara Raja. Now, where Amara Raja is concerned, we saw a spectacular rally on the stock a couple of weeks ago. Do you think this is the time to buy some of these counters?
So some traction is visible on this, especially in this battery stock. Exide as well as Amara Raja both have done well in last couple of weeks. Even for Amara Raja, the stock has given almost 21% return in very short period of time. Looking at the setup, we feel that Amara Raja can continue its upward momentum. If you are holding, if you want to buy, you can buy also at the current level. Keep stop loss of 602 and upside we are expecting around 660, 670 for Amara Raja battery. For Exide, stock is now facing resistance at around 180 zone, which is immediate hurdle for the stock. If stock crosses above 180, 184 zone, then possibly we can see further more rally in the stock towards 200 also. So looking at the setup for Exide also, our advice is to buy, even if it comes to near 168 also, it's a buying zone. Keep stop loss of 165 to buy and hold your stock, and upside target is 185 and then 200.
Right. My last question to you when it comes to stocks would be on HDFC and HDFC Bank. We saw a fair bit of rally coming in on Friday on these counters. They have seen or they would be seeing an increase in weightage on the MSCI, and that has triggered quite a smart rally on these stocks on Friday. What is your view on the HDFC twins going forward?
So both the stock have done well especially in the previous trading session, and now again traders attraction is there to buy the stock, because on the near term as well as on the short term setup also both stock have shown breakout. Looking at the setup for HDFC, yes, we are bullish and we are expecting this momentum is likely to continue further. Keep stop loss of 26.20 to hold your long position, or even you can buy a new position also at the current level. Upside target we are projecting around 27 and 27.20 in the near term basis. For HDFC Bank also we are bullish. The breakout is already there on the weekly chart. A multiple resistance zone breakout is already done. So looking at the weekly setup, we feel that HDFC Bank can scale up towards 1660 to 1680 in the continuation of this uptrend. One can buy at the current level also. Those who are holding now can trail their stop loss towards 1585.
Right, bullish view on the HDFC twins. Rajesh, before I let you go, what are you recommending for viewers this morning?
So Nandita, first stock is HDFC. Already we have discussed. So HDFC we are bullish. So we recommend to buy HDFC for upside target of 27.20. Another stock is from FMCG, that is Britannia. Stock has done well, and looking at the long-term setup as well as the short-term setup, now stock managed to give breakout of its multiple resistance zone on the weekly chart. And looking at the breakout, we expect that Britannia can extend its rally towards 4150 in the short period of time. So one can buy Britannia also. 4150, 4200 is the target for short term. One can buy Britannia also with stop loss of 4040. And another stock is from metal space. We expect metal stocks can continue their furthermore upside momentum in the near term also. So JSW Steel is our preferred pick from the metal space. Stock managed to give breakout on the weekly as well as daily chart. Looking at the near term, short term setup, we are bullish and we are expecting target of 745, 750 for JSW Steel. Keep stop loss of 705.
Well, with that, we're completely timed out on this edition of Morning Trade. Thanks a lot for joining in this morning, Rajesh. Well, for viewers, don't go anywhere because coming up next is Markets with Santu and CJ.